Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
IREN, 88% upside potential as AI revenue scales toward $3.4 billion ARR. This article was written by Dmytro Lebed. Summary: Pause. While IREN Limited is not yet a pure-play AI cloud infrastructure provider, it is on the verge of a final transition. 2026 will be the year of proof, where the market shifts its focus from promises to IREN's actual capacity deployment. I forecast an 88% upside for IREN shares to $103.96, provided the $3.4 billion revenue projection is achieved. Key risks include execution delays in scaling, high customer concentration with MSFT, and potential shareholder dilution from recent capital raises. Investment thesis: IREN Limited. IREN is one of the new players in the field of cloud infrastructure for AI, offering a unique advantage in the form of existing capacity required for the deployment of data centers. Earlier, this company was valued by the market as a proxy for Bitcoin, carrying out large-scale mining of the first cryptocurrency. But in 2026, it's expected that IREN will fully transition to being an infrastructure player in the AI computing space, backed up by a long-term contract signed with Microsoft, MSFT. Considering investors' interest in IREN shares as a new player in the AI field, the key to maintaining the previous growth in capitalization will be achieving the annualized run rate revenue, ARR targets in the AI cloud segment. IREN management expects results in the billions of dollars by the end of 2026. I would like to take a closer look at the company's growth catalysts, how it competes with other companies, as well as the risks that may arise during its transformation. Given the results, it is my opinion that IREN shares still have significant growth potential, so my recommendation for this asset is buy. IREN's strategy and growth drivers. From 2024, IREN Limited has been undergoing an active transformation from a conventional Bitcoin miner to an infrastructure player in the field of AI computing. Now, the company is using its capacity, formerly used for blockchain network calculations, for next-gen data center operations. Their rebranding and reorganization by the end of 2024 show that the company has picked a new growth strategy using current trends in AI development. Their main goal is to transition to AI cloud dominance in the company's EBITDA structure. Still, as of early 2026, we think IREN should keep splitting into two main business areas because Bitcoin mining is still the main source of EBITDA, based on data for Q1 FY 2026. As an example, if we break down IREN's revenue, the Bitcoin mining part is $232.9 million. It managed to mine 2,039 Bitcoin coins with an electricity cost of 0.046 per kWh. Meanwhile, its AI cloud service only brought in $7.3 million, showing how small this new business is still in the overall financial results. However, by 2026, the balance of these revenue sources is expected to change, and the target margin for AI cloud is set at around 85%. The decision to maintain the capacity to mine Bitcoin is a sound one, since transitioning to an infrastructure player in AI requires time, during which not only new generation data centers are deployed, but also work is carried out to establish contractual relationships with customers who will be provided with the computing power itself. Parallel to the operation of its own data centers, IREN is deploying ASIC miners. The company's competitive advantages, which include ownership of the land where its energy infrastructure facilities are located, also contribute to this diversification of its business. Another point to consider is that IREN follows a green agenda, utilizing 100% renewable energy to power its data centers. The energy is mainly generated by hydroelectric power plants and wind turbines located in British Columbia, Canada, and Texas, USA. Nevertheless, the fourfold increase in IREN's market capitalization in 2025 would not have been possible if it had not developed a new business line in the field of AI. The company is utilizing its existing mining infrastructure to convert it into next-generation data centers. As a result, it is able to provide cloud services for AI computing. What I mean by new generation is IREN's data centers, using special liquid cooling, Horizon, enabling more efficient cooling of operating graphics processors, thereby increasing their operating power without the risk of overheating the equipment itself. As the main driver of IREN's stock growth in 2026, I would point to the $9.7 billion contract signed with Microsoft. Partner agreements between the companies are organized for 5 years, throughout which IREN is obliged to provide the necessary computing power based on NVIDIA NVDA GPUs such as H100, H200, and Blackwell in order to support the training and operation of MSFT neural networks. Competition for IREN. Analyzing IREN's competitive environment, I would also highlight competitors in 2 main business areas, the Bitcoin mining sector and the AI cloud infrastructure sector. When it comes to mining, however, there are direct competitors that, like IREN, use hybrid AI miners. That is, they are the same companies that are converting their facilities into data centers. In this market segment, there are 4 main players. Core Scientific, CORZ, is the most serious competitor. Although it previously went bankrupt, CORZ managed to get out of its financial hole by reorganizing its business and has already received a $9 billion takeover bid from CoreWeave, CRWV. Nevertheless, major shareholders of the company did not approve this transaction. A competitive advantage of CORZ is that the company has enormous amounts of available electricity and currently leases 400 megawatts of data processing capacity to new customers. Its competitors also include companies such as Hut 8, Hoot, undergoing a similar transformation to IREN, though at a slower pace. Also worth mentioning is TeraWulf, WILF, the competitive advantage of which is its image as an environmentally friendly company that maintains AI capacity through the use of nuclear energy. Among other competitors, one can mention Applied Digital, APLD, who were the first to begin the transformation from a traditional miner to an AI player, extending their current order portfolio to $16 billion. There are also several companies that have been traditional Bitcoin miners to date. They are Mara Holdings, Mara, Riot Platforms, Riot, and CleanSpark, CLSK. These companies are betting on hash rate, affordable energy access, or increased cryptocurrency mining. Management at IREN has chosen a different path of development, so it is more relevant to analyze competition among companies that are specialized in AI clouds. I believe that the main competitor here is Nebius, NBIS, and in a recent article about them, they discussed the reasons why their shares are recommended as a buy. Literally just recently, in September 2025, Nebius signed a $17.4 billion agreement with Microsoft to provide the computing power needed to run the Azure cloud application. The company was able to do this thanks to its data centers around the world. Its data center in Finland, for example, has been recognized as one of the most energy efficient in the world. NBIS also has data center facilities in the US, Israel, and France. But apart from NBIS, IREN's competitors are CoreWeave and Lambda Labs. Just like NBIS, CoreWeave has the same competitive advantages, including priority access to the latest and best NVIDIA chips. In addition, the CRWV is capable of attracting large credit lines secured by the GPUs themselves. Meanwhile, Lambda is recognized as one of the most established players in the cloud infrastructure market, offering NVIDIA chips for rent and benefiting from deep integration into the developer ecosystem. IREN's financial profile and expectations for 2026. The financial profile of IREN's business is still far from ideal, despite its enormous potential for future profits, with all the valuation grade group's metrics still showing inflated values. But this is normal for a company that's aggressively scaling up as it enters a new, quickly growing market. In addition, based on data for Q1 FY 2026, the company's revenue was $240.3 million, a 348.61% increase compared to the same period in FY 2025. The figures were $11.8 million higher than the consensus forecast. Speaking of non-GAAP EPS, it turned out to be $1.88 instead of the expected 0.14 cents. But for 2026, things are looking way more promising, if you ask me. Firstly, they're expecting to see the first results from the contract they signed with Microsoft. Management estimates that once everything's up and running, they'll be pulling in about $1.9 billion a year. Furthermore, they plan to significantly boost their revenue in the AI cloud segment, with a record $3.4 billion expected in 2026. For this, data center capacity is expected to keep growing, and GPUs will go from 23,000 to 140,000 units. With this in mind, back in October 2025, they brought in an extra $875 million by issuing interest-free convertible bonds, and an extra $125 million through an option for an additional buyback, which bumped up their liquidity balance to $1.8 billion. It then conducted another issue of convertible bonds in December 2025 for $2 billion with an additional option for $300 million. This money will be used not only to purchase new GPUs, but also to implement its project portfolio. In April 2026, it plans to launch the Sweetwater 1 substation with a capacity of 1.4 GW. At the end of 2027, it will launch a second phase with an additional 600 MW, awaiting Q2 FY26 quarterly results. The IREN consensus forecast indicates an expected negative EPS of minus $0.09 and revenue of $227.3 million. Consensus forecasts indicate an expected negative EPS of minus $0.09 and revenue of $227.33 million. Over the past 3 months, however, forecasts for EPS and revenue have been revised 9 times, each time downward. I believe that the probability of seeing better than expected data is quite high, given that the last 2 quarterly reports came in with positive surprises. Furthermore, analysts' current consensus forecast includes concerns discussed in December 2025 about a possible slowdown in the AI supercycle. Considering the signed MSFT contract and capacity scaling, I expect IREN's actual results to be much better than initially expected by the consensus forecast of analysts. IREN valuation. In order to assess IREN's potential value, we must take into account that using traditional PE multiples is not reasonable, since the company has an enormous capex. As a result, other multiples should be used. An example is the EV sales valuation. The company's revenue forecast for 2026 is currently $3.4 billion. The EV sales ratio would therefore be 5.58x. The EV sales ratios of its main competitors are higher. NBIS, for example, based on a projected revenue of $3.45 billion for 2026, would have a multiplier of 7.86x. The market estimates CRWV at 13.14x. Taking their median, we get 10.5x. This means that if we revalue the shares to the median EV sales multiplier, the IREN price will go up by 88%, going from the current $55.30 to $103.96. IREN risks. To my mind, a big risk for IREN stock is tied to how it's changing its business. Despite signing a deal with MSFT, a few critical things still need to be considered. This is especially true if it leads to a mismatch between how fast costs and revenue are growing. The year 2026 will provide market participants with answers to questions about the profitability of the AI cloud segment. The IREN management has set a target of 85%, an extremely high estimate, yet realistic given the technological expertise of the company's team. First and foremost, this problem of mismatch is possible due to potential delays in deploying additional infrastructure. This is because the company is planning a huge increase in capacity from 23,000 GPUs to 140,000 GPUs by the end of 2026. And any delays, such as connecting to the ERCOT grid, could push back when the new capacity starts generating revenue. Unfortunately, we also note that IREN is becoming highly concentrated on one major client, MSFT. While this deal is a golden ticket that will enable the company to realize all of its ambitious plans, the company is validating its business model by making itself dependent on a single counterparty. Any problems with MSFT will lead to a sharp correction in IREN's share price. One of the reasons for this could be the same delays in scaling the cloud infrastructure for AI computing. With the focus on a single customer, there is a risk of shareholder equity dilution, as in December 2025. Together with the issue of convertible bonds, there was an additional issue of 39.7 million shares at a price of $41.12, allowing the company to raise an additional $1.63 billion in capital. Conclusion. Overall, IREN's fundamental analysis shows that its shares are really attractive for investors. One of the main reasons for IREN's continued growth will be the successful transformation of its business model, which will see AI cloud share of revenue jump, becoming the main business area. Taking into account the expectations from the implementation of the contract with MSFT and the
Hey viewers, don't forget to like, subscribe, and add our channel to your favorites. We will continue to provide you with more insightful stock analysis.